Welcome to the Finance Village podcast, where we navigate the dynamic relationship between financial professionals, their industry, and the clients they serve in an ever-changing landscape. Let's begin. Hi, everyone. Welcome to another episode of Finance Village. I am your host, Sheldon Bro, and my co-host, Sean Adeyemi. And in this episode, we're going to dive into the often chaotic and amusing world of collecting data in financial services for all financial professionals. And it's the process of collecting all the data to do the thing you need to do as a financial professional. We're going to explore it, why it feels like a clown car, delve into some real stats as to what behind this process and why it's a headache for financial professionals and clients alike, and discuss some practical solutions that make this cumbersome process a whole lot smoother. So I'm going to start out with a couple of stats, and then I'm going to share my opinion on something and see where Sean stands on it. It's a great debate within the financial professional community. So a few stats. So the number one deterrent to creating a financial plan is the effort required to gather data. I've memorized that one verbatim because I've used it so many times. According to a financial planning survey, 63% of financial advisors find data collection to be the most time-consuming aspect of their work. A Morningstar report reveals that 45% of financial advisors face issues with data accuracy and completeness even when they do collect it. Harvard Business Review highlights that 65% of clients find it challenging to provide accurate financial data due to organizational issues personally. So first, we'll get into it, Sean. Where does data collection start? It starts with the financial professional. I always judge every experience I have by the intake process. When we get a new client and we want to collect data from them, there is a great set of advisors and professionals that will say, I want you to fill this in, and then we will have a conversation. And then there's a great number of advisors that say, I'm going to call the client, I'm going to make it as easy as possible for them, and I'm going to just fill out that same application, but I'm going to fill it out on my side so they never have to see it. Which side of this fence do you sit on, sir?
I sit on the first side, and I'd probably say a combination of both.
Blasphemer. Go ahead.
I'd probably say a combination of both, because I think the second option, which is going on the phone, having that conversation with the client to get all the data, they don't see it. The problem is that many clients don't even know or have full access to the information that you require. So you can tell them up front, have this, have all of that up front.
How is that going to get better by them having to fill it out on a form? I can agree with you to an extent on a blended version where I will send it out and say, if you can fill out any of this in advance, it'd be great. But if not, no problem. I'm going to take it all from you verbally.
The challenge with just going over the phone to have this conversation is that they don't always have one, accurate data. Two, they don't have it right there with them. Typically, when you send a form or you have some kind of digital client onboarding, and that's what I would call it. I won't call it a form, because
I still believe in having that and offering it, to be clear. But I think that there's a lot of advisors that won't be willing to then, as a supplement, when the client isn't filling that out. If I don't get that from a client within, like, real quick, 24 hours, I'm calling them. I will fill out that same form through that same digital experience. I believe in having it, and I believe in offering it, and sometimes you can get it. But that's a utopia, and that's a delusion to live in, that you're going to get that on a regular basis.
I don't think so. I don't think so, because in today's day, clients are busy. They don't always have all the information in hand. When you send them some form of digital onboarding, whether that's a PDF, which in my opinion is obsolete, but some sort of digital onboarding where they log into a platform, they enter all their information. Sometimes they start the work, and I know this too, because the same systems that we're asking clients to use are the same systems we're using as clients for other services that we're getting.
But so you think you're going to get more accurate information because you're sending them a web form?
Well, not necessarily because you're sending them a web form, but you're doing a combination of both, because you're giving them access to this portal. They start the information. They realize, oh, I need this, I need that. So they go back. So they stop. It may take them a few days. Okay, I need to get my job letter. I need to get this from my pension statement from my work. I need to get this. They get all that data collected, and then go back to the platform which you offer them, and then start to fill it out. It's really hard to do all of that in one meeting over the phone, having the conversation.
Okay, well, let's talk about it from the two sides because there's financial planner and there's my world, which was more on the mortgage advisor side. So for me, I don't need precision of the pennies on the first call. I am telling people two simple things really is the kind of accentuating points is one, just give me your best guess. I will collect the statements after the fact, but now I can get an idea of where we're going with this and kind of where we are. I don't need to know if it's $16,001. If you think it's 15,500 on your credit card, that's probably going to be sufficient enough for me to get an idea of the debt ratios. And the other part is just making sure that they're giving me full disclosure. I have, for the last decade, on every call I would ever take, when I was taking the applications, is I want you to tell me about all of the investments, all of the debt that you have in the universe. Because if you don't use that language, for whatever reason, they're like, oh, I forgot I had a car payment or this. I have to like really, and I say it twice on the call. So that's everything you have in the universe. So do you feel, and that you're a great person to ask because you have the planner and the mortgage advisor license inside that you're doing, do you see a great difference in the two that maybe you can be a little bit more loosey-goosey on the mortgage side and you want that precision up front and do you really need to get that precision up front? Because you can collect a lot of verbal good information and then on the mortgage side, we would always send out, okay, now prove all that what you sent me in the statements, but at least now I have an idea. Are you A lender or B lender or this and that? So go ahead and speak to that.
From a speed processing, from the ability to deliver a wonderful client experience, even just on the mortgage side, I find that hard to do with just a phone call. And what I mean by that is this. I mean, initially, I may have a phone call with a client, get like basic information, have it in my notes, but then send them the digital onboarding after the fact. The basic information, and I'm talking strictly on the mortgage side right now. The basic
So you're
information
telling
I have.
are you getting assets and liabilities?
Yes, I am, sort of.
And then you're sending them a form to fill that out, what they've already told you?
Yes, because when I'm
And you
sending out
use
the
the word
form,
great clients experience in the explanation. Go ahead. They're not convinced
no,
me yet.
because here's the thing. I'm getting approximate numbers because the reality is sometimes just my initial conversation with them, I know there's definitely no way we can do this deal for them. Talking strictly on the mortgage side. So I don't bother sending them a digital application because I know the numbers are so off, we're not going to be able to do it. Someone tells me they earn $45,000 a year, they have
But
$5,000.
even if they tell you a number verbally and then they get you a statement, that statement's probably not even going to match what you pull in the credit bureau anyways. So really,
That's
that
true.
first approximate verbal that you got, so now you're putting them through the labor of they've given you the information verbally, and that's one pet peeve for me is, and I always try to talk about my partner is like, I've given you this information. We talked to a client. Do not ask them for that information again. Now you're sending them a form where they have to fill out something that they verbally told you and then reinforce it with a statement when you're going to end up pulling their bureau to get the exact numbers anyways.
See, when it comes to liabilities, a little different, right? Because I'm getting all that information from the credit bureau. When it comes to mortgage side of things, it's a little different. But if we speak to the financial planning side of it, data, more accurate data is important because we don't pull credits.
For which
We
one?
don't
Which segment? Investments?
on the planning side.
I know on the planning side, but what segment? So you're saying liabilities, but so where do you really need to have that specificity up front right away to start doing something intelligent for the client?
Because once they submit the information online, then I can at least start. See, just like you rightfully said at the intro of this call, you said 65% of financial advisors say data gathering is the biggest piece. And I 100% agree with that. It's the most onerous part of starting the financial planning piece. And so if I have to engage in a 90-minute discovery of all the client's information, because typically that's what's needed to
90
get.
minutes?
Yes, I'm
What
being
more are
serious.
you collecting on financial planning? And I'm genuinely curious. I'm not
Because
asking this
because
sarcastically
because
because
on the
I'm going
planning
through
side,
like, well, I mean, maybe insurances because you don't get that on mortgage side, but 90 minutes, bro. When I
no, no,
used to
no. But
work
remember
at the
this,
bank,
Sheldon.
I used to be able to do this verbally within like 12 to 17 minutes.
Yeah, but
Everything.
you're not
Whole
planning.
application.
You're not planning. Okay, so when I say 90-minute discovery, I'm not talking about just getting numbers. We're talking about goals. We're talking about what they want to do. We're talking about their story, their money stories. We're getting to
Okay,
know the
fair.
client. So when I say 90
And that's
minutes,
part of
I'm
your
not saying
fiduciary
90
duty. I
minutes on.
respect that.
I'm not saying 90 minutes on getting all the data. I'm saying 90 minutes to get their life story, where they're going, where they want to be, what's important to them, and all of that, while also getting all the data. But I found that before I even onboard the client, I'm sending them access to our client portal to start the information on there. Because what that does as a planner for me is it allows me to engage in conversation where I'm now confirming information they've entered. And that's a more expedient way to get the client to the finish line than having to have this conversation where you're writing everything down and you're trying to go through numbers and you're doing that live on a call. Many times you miss out on the opportunity to really connect with the client because you're so focused on getting the number right as they're giving it to you, right? But when you've already done that through like a digital engagement, digital client portal, and you're simply confirming the information, it allows you to then still really be able to engage the client in conversation because you're not trying to catch every dot and every number because they've already put it in there for you. That's why I'm a proponent for having a digital experience for the client to onboard, enter all the information, and then you can then confirm those information after the fact. Then trying to do that over the phone. That may be possible on the mortgage end of things, but on the planning end of it, I believe it breaks up the client experience and makes the process of financial planning and gathering data even more onerous. And then that brings in the question, and then that brings in the other issue planners have is this. If I'm taking, if I'm charging as a fee for service planner, I'm charging either per hour or I'm charging a full package. You pay $5,000, we give you all of this stuff for your financial planning. If I'm spending 4 or 5 hours on just collecting information from the client because of multiple conversations and meetings we're having, it's taken away from one, the client experience, and two, it doesn't allow me serve more clients. We always talk about how
Okay.
financial
You
planning
made
should
a
be
pretty
more.
damn good case. That was a pretty damn good case on the planner side. In my mind, I was like waiting. I was like, you're not convincing me of anything yet. Okay, so on the mortgage side, I'm still where I stand, but you have made an excellent case for the planner side. Because when you're going into a mortgage conversation, you know what you're going in for. You just want to make it kind of fast and cheap. You want to know what you qualify for. You want to get the approval. But financial planning is a totally different experience. You don't even necessarily know, because I'm always pushing people to go talk to financial planners. I know it's the intelligent thing to do. I know there's a lot of value there, but you don't always know what that low hanging fruit is until you have a good conversation. There is a cost there for that fee for service and that true fiduciary. And you're right in that financial planning and the financial advice part, which is very different from mortgage advising and mortgage brokering. There is a huge psychological aspect that you now have to tackle in a totally different way. And it's not the best expenditure of their funds unless they tell you, of course, which I'm sure in that case you'd be willing to do. I absolutely don't want to fill in your stuff. I definitely want to do this. I've got the statements in front of me. Take the information or buzz off. So you've convinced me fully on the financial planning side. That was an excellent case.
Now, no, to even add to that, even though there is digital onboarding to some degree in Canada, we're still way behind. Like I see the U.S. side still, the U.S. side way farther along that path than we are. And so some of the things you mentioned at the beginning, the getting accurate information and collecting all that data being the biggest piece of it, even from a client perspective, I think a part of that challenge, and you can speak to this is the whole issue with open banking in Canada, right? Because all the financial information is still so disjointed that we're trying to clarify statements, we're trying to clarify investment balances and all of this and holdings and all of that because the information is so disjointed, even the client may not know where to find it. And then it further irritates the client because they got to go dig in their drawers, they got to go look for all of these documents they need. So I think a part of the problem that makes this whole data collection a nightmare in Canada is one, lack of open banking, and two, in addition to that, I think also there needs to be a trust factor. And let's face it, there's still that trust factor, at least in the Canadian ecosystem, that even if I log into this portal, I don't want to connect my bank account to it, even if it has access to it, because they're afraid. They're going to steal my money. Is that too much? Is that too much
Well,
privacy
let's
being
tackle
given
that for a
away?
second and give some sobriety both to the advisors and the client. Number one,
Europe is fully there. Everybody and their mother's connecting. They have full-on open banking in many wonderful, majestical ways. They're probably about 20 years ahead of us. The US is about 10 years ahead of us. They still have a lot of good banking, open banking opportunity. They've moved from the street scraping mostly to that OAuth connectivity. And that just means that more like direct integrated connectivity. That's that extra layer of kind of confidence and security. And then going into those deeper layers of more connectivity and more open banking. But at least in the US, they have really psychologically gotten there. And unfortunately in Canada, because and it's not, I'm not going to blame it on the citizens because I am one, but it's because our system hasn't given us the opportunity to psychologically get there. All of the financial professional, I would say not all, but a lot of the financial professionals and the clients are scared of the cyber boogeyman. Yet they forget or they didn't notice that you can pretty much Google that most of the big banks, if not all of them, have had huge breaches at some point. Equifax has had a huge breach at some point.
Right.
You hear those things, and a lot of the time, I mean, some people run into their headaches, but I don't believe that, remotely the fear that should be there is there. These systems have been established for a long time through different data aggregators or consolidators of information.
Mm-hmm.
And even with, our sponsor for this podcast, Pocket Finance, there's a lot of things that you can connect to. There's still many things that you can't. The insurance segment is very slow to get to the connectivity space. Close out, let me just kind of overview that. I think that the first step we need to take is, while everything you say, and I've been saying it for a long time, and many have, we are far behind. We do have a lot of tools that advisors are not taking opportunities for. We've got a higher age of older advisors. And as much as those older advisors want to continue to pretend that you've been doing it this way and it works for a long time, you're going to sell your book of business and it's going to be worth a lot less. I have talked to a multitude of younger advisors that are looking to buy books of business that say they would have paid significantly more for the book of business had it been more digitized. So you can stick in those ways if you want and say, well, I'm at the end of my career and I'm not going to bother with it anyways. But you built that book of business, it's worth something. And if you want to get a good chunk more for it, then if you don't want to do it, have somebody else come in and do some consultation for you, because there'll be a big return on your investment there. So the advisors have to change their thinking about that. Be really intentional. FPAC has a really great advisor tech expo that happens every year where you're able to highlight a lot of those. Thanks again for joining us for another episode. We look forward to the next one. We've got some great episode coming up with some great topics and some great guests, and we will see you on the next one. 92% of people trust referrals from people they know. But there's a better way to make those introductions. Wrap your arms around your client with your professional team. Join your client's team free today. PocketFinance.com.